using our 3-year per annum returns of 25 to 28%, whereas most retail retirement funds out there are somewhere between 8 and 12%.
Yeah. Brendan Gow, global asset manager and investment banker, as well as multi-business owner.
You're going to take a punt on 10 different companies, knowing that 8 of them are going to fail, but 2 of them are going to go 10x. And that's where they're making their money. The last time that we had a major pandemic globally was back in the 1920s. And we had, I think it was 8 or 9 years of the most unfounded growth in every market. Property, equities, whatever market you're in, we had 8 to 9 years of just complete unfounded growth. With crypto, there's no way to analyze the price. Is it fair value? It depends. And I've said this time and time again, the valuation of cryptocurrency is based on whether Elon Musk is tweeting about it or not. There's no way that you can have balance, complete utter balance, if you really sort of locking yourself into growing something, from a business perspective. You cannot give 100% to that and present to your family. If it's something that I'm passionate about and I'm speaking to somebody that wants to grow their future, they're passionate about what they want to do, I want to invest in that. What we keep saying is that I can't believe I get paid to do this because it's just such a joy every single day. That's what gives people like me, like you, the ability to dream a little bit and take your balls in your hand and say, let's just do this. Let's go and get it done. If you are doing something on a day-to-day basis that you hate doing, you're not passionate about it, that if you didn't get paid for this, I wouldn't be here type thing, you're in the wrong line of work. And the reason that people don't change that is the
Welcome to the show where we talk to successful people about the bits you don't see. Today, we're talking to Brendan Gow, global asset manager and investment banker, as well as multi-business owner. Brendan, how are you doing?
Good, thank you very much. Good.
Thank you for coming along, and looking forward to hearing about your story. It's super interesting, even just from the chat that we've had before we started. What is the story of Brendan?
Well, I guess it's long and it's varied. At the moment, I'm executive chairman of a private wealth business based out of Australia, and really it is a global company in that. It is more than just private wealth. We've got interests in different things from media and retail and other things like that. But really, where this all started was me working in finance for virtually 20 years, and it took me 20 years really to realise that everybody working in finance doesn't know how to run a finance business. That's the way that I see it anyway. And I think a lot of that really was customer service. Because I think working in finance, you realise that, you're plugging away every day and everything you're doing is for a client. I think you lose sight of that fact. And I think a lot of these big businesses lose sight of that fact. They're more worried about their bottom line, whereas really the reason you're here is to make lives or make people's lives better, and those two things can sometimes be counterintuitive, I guess, but I guess that then led me to leave a big corporate job that I was in, one of Australia's biggest private wealth companies, and take 15 clients and $5 million of funds under management. And
is that legal?
Do it myself. And look, ultimately, it's not an easy thing to do when you're leaving a big institution like that to say to clients, well, I want to go out and do this myself. And I'd love it if you'd come with me, because of course I had more clients than that. And for them, we're talking about, the life savings they've spent their careers building up. Am I really going to trust this young guy with all my money and my retirement? So far it's worked out quite well for us and for the clients.
So what is private wealth for those at home that don't understand it?
Yeah. So I guess it's a pretty fine line between what is that and what is, just broad general financial advice. What we see in Australia especially, and I think we see a lot of it here really too, is what financial advice is a client will come to me and say, I'm in this situation and I want my situation to be this. Help me get there. And that financial advisor, they might see the client, twice a year for a review. They'll stick their money into some mutual funds, maybe some bonds and IBDs or something like that, and they'll sit there for the next 10 to 15 years. And that's exactly what that is. Private wealth is active management. My clients, I'd say half of them hear from me on a daily or a weekly basis. The least a client would hear from me is at least once a month. And that's also driven by the client. So that's not us calling them constantly to hassle them about things, but it's them wanting to take an active approach in their finances. I guess the difference in private wealth and regular retail financial planning is the amount of activity. It is the amount of customer service. We don't just speak to the client twice a year and make their money grow. We take an active role in their families' lives, when their kids finish high school, when their kids have birthdays, when they have birthdays, helping our clients navigate life, not just, like I said, helping to grow their money.
Yeah, that makes sense. And now, does the higher activity, does that translate into higher returns generally? Yeah,
definitely. I think that if you are looking at working with a private wealth advisor versus a regular financial planner, a lot of people actually assume a private wealth advisor, you pay more in fees. Not necessarily the case. And in fact, with our clients, most of our clients now pay significantly less than what they have historically, because we're very transparent about our fees. It's a percentage-based fee on what we manage, whereas what they've been charged in the past has been, there's been insurance commissions, there's been investment commissions, platform commissions, all those sorts of things. So it's not necessarily about the cost, but I've completely lost track of what was the question.
So the initial question was, do people get higher returns by coming to private wealth rather than the once or twice a month people that they would have a conversation with, once or twice a year people that they'd have a conversation with?
Yeah, that's right. So coming back to that, I was sort of talking about fees, because people assume that fees with private wealth would be higher. Not necessarily the case, but typically returns. If you're comparing a private wealth advisor's returns to a regular retail financial planner's returns, you're obviously, as a client, going to expect better from active management. Now, from us, proof is in the pudding. Our 3-year per annum returns are 25 to 28%, whereas most retail retirement funds out there are somewhere between 8 and 12%.
Yeah, that's what I would guess. So it is like markedly higher then.
Yeah, it's significantly, and one reason for that is the active management. We are constantly looking at the portfolio, and I don't mean we're just regularly looking at portfolios. Every single client portfolio gets looked at every single day by a research analyst and a financial advisor in our company. And we're talking about hundreds of clients. And it's important for us that continues to happen, because that's what we're in this line of work for. That's what we do. If you're in more of a financial planning space, more of a retail space, you're not going to be reviewing, analysing. You're kind of just going through the trends of what the market is doing, right? So in a lot of the portfolios, we're moving out when it looks like a trend is about to drop, and moving back in when it looks like it's going to rally. Aside from that as well, is that most of our clients are actually wholesale investors, which is finance terminology. It means that you typically do have a higher level of sophistication in investment markets. Now, that does give us the flexibility to find wholesale-only investments. These are more sophisticated types of investments. There might be private credit, and there might be things like IPOs and private equity that we can take part in that we wouldn't really take part in if we're a retail investor. And I was given the methodology of this from an old advisor many years ago. He said, most wholesale clients, they'll understand that if you're taking part in purely private equity, you're going to take a punt on 10 different companies, knowing that 8 of them are going to fail.
Yeah.
But 2 of them are going to go 10x, and that's where they're making their money. And there's a lot of truth to that. And in our day and age now, with private equity, there's I find there's a lot more stability in private equity. There's a lot more capacity for research and analysis, and so for us to be able to research private equity stuff a lot more, we're not really failing on those 8 as much. So,
right, okay.
I mean, you are always going to have the ebbs and flows of markets, but it is definitely the active management that you get from private wealth, the broader scope of investments that you can take part in, that offer clients high returns.
So what sort of stuff would you be putting my money in? If I came to you, I went, Brendan, here's $500,000. Where are you putting my $500,000?
Yeah. So our clients start at $5 million.
So you're telling me to fuck off then?
Turn you away. So thank you, but no thanks. No. So what we're really looking at the moment is we start by breaking a portfolio down into a third. Okay, and then what we'll do is we'll alter that based on the client's risk tolerance. Okay, so every client is risk profiled first, but typically we're looking at a space of building a core or a foundation of the portfolio. That's something that's fairly safe. It's focused on capital preservation first. That's going to give you your 8 to 10% per annum. The stuff that's just going to tick along and do its thing. That might be in anything from just blue chip shares, large cap shares, your Amazons, Teslas,
Nvidia,
Apples, all of that sort of stuff. Then we're going to look at the other third, which is going to be your private equity, private credit, and that's going to offer things that is going to be either a regular income, somewhere from your 12 to 15%, or if not, if it's private equity, we're going to see more significant capital upside to those. And then we're going to look at the other third, which is going to be more your specky type stuff in direct equities. It might be in other avenues as well, but typically what we're aiming to do with those first 2/3 of the portfolio is just say, okay, this is our comfortable space. This gives us what we need every year and preserves a lot of the capital. The last third that's more speculative, that's the stuff that gives you the cream on top. Yeah. That's the stuff where, we say this to clients all the time, that's something that you don't have to take part in. If you don't want any kind of speculation in your portfolio, we just leave that out completely. Quite often clients will say, well, okay, give me 10% of my portfolio in something that's speculative. And that's fine, that's great. It means that we're more actively looking at those speculative plays more so. Time gone by, and I mean, if we go back to the end of Trump's first term, the market, you could see the ebbs and the flows almost like it was written in the book. We knew that on Monday the market was going to plummet, and we knew that on the Wednesday it was going to start to come back up again. And we use this thing which is called a long-short strategy, which basically means, so if you're long, it means you're buying stocks. Okay, you're hoping for the market or those companies to go up in value. If you're short, it means you're betting against those stocks, assuming that they're going to come down. Now, what we'd basically do is we would be holding short positions on the Monday. So we'd get a profit that day. We'd sell out of those shorts, and then we'd start to go long again by the end of the week with a view that we're going to start to go short again, because what we're trying to do there is we're trying to use the movements in the market to make a profit every day for clients. And again, it doesn't work every single time. You don't, trying to time the market is a bit of a mug's game. But it offered us significant returns where we had clients, 36, 38, in excess of 40% over that year because of that long short. Now, that was the strategy at that time because that's what worked. It's not always that way. And so that's why that last part of the portfolio, we're always conscious that it's more speculative. It needs more of the active management side of things, and that's what we're talking to clients about regularly, whilst the other portion of the portfolio, the core of the portfolio or the foundation, is just plugging along doing its thing. Now that does need its active management as well, but it's less active. I guess if we're looking at the speculative portion, you're probably more focused on that on a daily, weekly basis. Then you've got sort of that middle third where really you're looking at that on a month-to-month basis, and then the other stuff is more quarterly.
Yeah.
So yeah,
that makes a lot of sense. Now, a lot of the people listening aren't going to have $5 million to give you. They might not even have the 500,000, but I would say a lot of our listeners will have $100,000 that they could invest. If you were them, what would you do with that $100,000?
Diversity is definitely going to be key. I think that if you had $100,000, investing in property is probably, maybe might already sort of kick you out of the market, especially if you're looking in Dubai.
Yeah.
Because you're not able to diversify that dollar. Okay, now if you can, fantastic, go for it. The reason we like equities is it's cost effective. It's a very clean type of investment. So I would build an equity portfolio with some kind of deposit-based product, a high interest bearing account or something like that. Something that, again, is preserving capital, paying some interest, and you've got the rest of your money there making the effort for you regularly. I think that property in Dubai is definitely one of the best property markets. I wouldn't even say arguably, it is definitely one of the best property markets in the world.
I think it's violently underpriced as well. When you compare it to any of the major cities from where you're from, Australia, any of the major cities where I'm from in the UK, it's so much cheaper. And Paris, anywhere in America, it's so much cheaper. And I think there's so much scope for it to go up.
I would argue that. I don't think it's cheap. I think it's definitely overpriced.
Yeah?
That being said, the last time that we had a major pandemic globally was back in the 1920s. And it was following a fairly massive war. It was the influenza pandemic. And we had, I think it was 8 or 9 years of the most unfounded growth in every market, property, equities, whatever market you're in. We had 8 to 9 years of just complete unfounded growth. I know people draw this post-COVID time to a lot of historical events like the dot-com bust. You go back to the 80s, or you go back to all these different times, or GFC. I don't think that has anything to do with it. Really, the most relevant period of time was that 1920s period where we had that pandemic, and then we had 10 years. After that, we had the Great Depression. Now, now that we have reserve banks and things like that, I don't think there's a fear. So why do I think that? I don't think property is cheap in Dubai, but I'm not really concerned by that, is because that doesn't mean if something's overpriced that it doesn't continue to rise and rise and rise.
Yeah.
Things can be overvalued and continue to be overvalued. You're not always going to run to a specific business model or let's call it a business cycle. And so I think that Dubai property will continue to run, but ultimately people are borrowing money to buy property in Dubai predominantly. I know there are people out there, millions of dirhams in the bank, that are buying property cash, especially those people that bought 10 years ago and are now selling and looking for something else. Most people are borrowing money, and the rate at which those people's salaries is increasing is not increasing it anywhere near the percentage that property in Dubai is increasing.
Yeah.
And so if you're conscious of that fact, property's growing faster than salaries. That means mortgage rates are going up faster than what salaries are. And so how, in turn, can the property market continue to maintain that kind of stability?
Yeah, interesting.
It doesn't mean that it's not possible, though. And the property market in Dubai has proven me wrong time and time again. So, and if you're like me, and you're that guy that wants to wait for the dip in the Dubai property market, then just don't buy property.
Yeah.
What are you missing out on? You're missing out on the ability to buy a home and have somewhere stable to live, but that doesn't mean you can't invest your money elsewhere and still get significant growth. People have invested in crypto, and people have invested in stocks. They've invested in companies. So that's, just because you're not buying a property where you live doesn't mean really that you're missing out.
What do you think of crypto? You mentioned it.
Yeah, we won't advise on it. I flat out refuse to advise on it because we deal for clients, and this is for clients' portfolios. We deal in certainty, things that you can research, things that you can analyse, things that you can, if it's a company, we're looking at, in private equity, for example, what have they done, where are they going, what are the financials, what does that look like? If we're looking at stocks, if it's a mining stock, what do they own? What are the resources? Do they have debts? Can they get that resource out of the ground? All that sort of stuff. With crypto, there's no way to analyze the price. Is it fair value? It depends. And I've said this time and time again, the valuation of cryptocurrency is based on whether Elon Musk is tweeting about it or not. And if he's
it's not certain about that.
No, exactly right. So it's based on that. And so, we won't advise on it. The future's a very long time. So maybe that's somewhere we'll go down the track. Do I have some crypto? Absolutely.
That was going to be my next question.
Yeah, absolutely. I think that you cannot have, if you're going to have a diverse portfolio, not have access to some kind of crypto in your portfolio. Yes, I've done quite well with some crypto investments, but again, from the perspective of client portfolio management, crypto's not it.
Yeah, because you need to, when you're going into crypto, you need to accept that one day you might wake up and it's a zero. And you can't be advising people, give me your $5 million, I'm going to put 10% of it into this thing that you just wake up and it is at flat zero the next day. I can understand why you maybe wouldn't want to. So we've kind of narrowed in on one thing that you've got going on, but you've got loads. So tell me, what else have you got going on?
Well, that is a big part of what my life is, really. But my life started off in finance, and I've kind of always done that. And in the past 24 months in Dubai, it's become more about maintaining that business, letting it look after itself, and mentor the younger guys in the business, and I absolutely love doing that. But in that period of time and over the past few years, I've found that investing in businesses is actually, it's a lot more fun for me. Investing in things that I'm passionate about, investing in a tailor, investing in a media business. So there's a few different versions of Brendan out there at the moment, and I don't like the word entrepreneur by any stretch, but I guess that's probably what I have evolved into. Now, so many different interests out there and in different companies, and I'm not doing those myself. We've got people that manage those things, but if it's something that I'm passionate about and I'm speaking to somebody that wants to grow their future, they're passionate about what they want to do, I want to invest in that. Yeah. Because there is nothing more powerful than somebody that is passionate about something that really has a belief that they can do something better than what everybody else is doing now. You met some of the guys before, Liam at In-House Media. There's not a better videographer, him and Hamza, there's not a better videographer in Dubai. Again, arguably, but the thing about them is they're just so good at what they do, and they don't really want to do anything else. They get up in the morning, they want to do that, they want to edit, they want to get out, they want to film, they want to come up with creative ideas. And the same for me, what I've wanted to do when I started the business, I wanted to wake up in the morning, I wanted to go and look at markets, look at client portfolios and see what they're going to do through the day. I wanted to speak to people. And I think that if you can find people that have that passion, and this is kind of what we keep saying, is that I can't believe I get paid to do this. Because it's just such a joy every single day. I get up at about 3 o'clock in the morning now every morning to manage the Australian market. You can't do that if you hate your job. Yeah, you'll just get sick of it. And just recently, we had a situation where I couldn't travel as much, and this is in my family, and so I wasn't back to Australia as often as I typically would be. This is sort of over the last 6 to 7 months, but about a month ago I went back, sat with the young guys that are actually at the coalface working with clients, and just 2 weeks of some of the most enjoyable moments in my company's life. Seeing these guys speak to clients, meet with clients, meeting with clients with them, and having conversations, managing portfolios on a daily basis. So that is, exactly what I got into this business for. But I don't really get the opportunity to do that as much anymore.
Yeah.
And so that being in front of people, trying to grow their future and their businesses and mentoring them to do that, that's what I've become more so passionate about now. And I think that's how that's led into investing in other businesses. But by trade, I'm a stockbroker.
Yeah. Okay. Makes sense.
It's evolved.
Yeah. So what else is on the horizon? You've obviously got these other things going on. What's next?
Yeah,
or what's active?
Well, I mean, there is a lot going on at the moment that, trying to build an empire one step at a time. But, I mean, the future is quite bright for us, and it is definitely more financially focused. So we're looking at taking over a listed company in Australia, which also comes with it another private wealth business that has 40 years of heritage in private wealth, which is significant, very well known business. So we'll be taking over that over the coming weeks, which will be very big for us. We'll be expanding staff from, the last, since the creation of Capital House, we've never been more than sort of 14, 15 staff. Following that, we'll probably be closer to 40 or 50,
wow.
Which still is not big numbers. I know that for the size of business that we are, but we'll be over $1 billion of funds under management, and still, very, very lean. I mean, there's the big corporate that I worked for in Australia before, they were 75 people per office, 5 offices throughout Australia. So we're talking some pretty big staffing numbers. We're talking about running the same funds under management, but with about 50 people.
Wow! So you're doing this same funds under management as, what was that? 75 times 5. I don't know what the maths is in that, but a lot of people, 400 people or something.
Yeah. We have, one of the things that we've done is, and I know that we focus, I say we focus a lot on customer service, and it is integral that we do that. We've got things down to a fine art where we're enabling the client-facing advisors to just spend time talking to their clients and maintaining that relationship, talking about investments. There is a lot of innovation in the background and technology that we have grasped since our creation, that a lot of these older, bigger corporates, they're not agile enough to move to this technology. That's just the problem with it, is that they're so set in their ways. How do you go and change 500 staff members from one way they've been doing something, completely change systems to something completely different? Well, we're able to do that because we have such lean numbers. All we need to do is just move the clients around. And our clients understand that we, in the process of building our business, we are going to innovate. We are going to build on technology as much as we can. And one thing that we have done since the beginning was, when we find a technology that we like, we don't just hire it or rent it, we buy it. We got a really good compliance system, which is boring for everybody else, but for a financial advisor, a compliance system that is just fantastic. It effectively takes 80% of the compliance workload out of an advisor's lap. We went to that business, we said, okay, build this for us. And then the guy that built it for us, we hired him into the company. So once they built it, we then hired him, brought him in, and he continued to develop it from there. And we continue to do those things. And a lot of that, again, is, we had a lot of media and marketing that we were doing for the business, and we were always looking for videographers and editing and social media. Well, okay, so we just bought a media business. So there's a lot of, I think, when we need things, you can go and you can rent it, or you can hire somebody to do it, or you can just buy a business that does that.
Yeah.
And that really brings us a lot closer, like I said before, to the coalface, where we know where we need to move and where we need to innovate, and we invest in that. Now, coming back, and I've spoken a lot about, my views on Jamie Dimon and how much I really appreciate a lot of his expertise and his experience. And he talks a lot about a fortress balance sheet, and what that fortress balance sheet allows you to do is, it allows you to pay your bills, pay your salaries, and all those kinds of things. It does also spare a lot of cash flow for research and development, innovation, technology, and also investing in the business. We have taken that since day one, that fortress balance sheet. We've taken that to heart. We've run with it, and we invest a significant amount of the company's profits into self-development.
And it's self-fulfilling, right? It's like a snowball that will continue to make it better because you're innovating faster than anyone else.
Well, that's exactly right. And so when it comes time we've grown a lot out of acquisition. We're never really looking for new clients. But having said that, when we're looking at acquisition, and that has primarily been in Australia, we're finding old businesses like that one I mentioned before that's got a 40-year heritage to it. They're still running all of those clients in the same old way that every other private wealth firm does. And we said to the back office guys in that business, if we could give you this, and this as software, it'll take this out of your day. How much of your day is freed up? And they said, well, that's 90% of what we do.
It's wild.
Which is fantastic. Okay, so we're not then thinking, okay, well, we don't need these guys anymore. But in these businesses that have been around, these guys have been around for so long. If I've taken 90% of your workload off your table, what else can we get you to do now that generates and produces revenue? And that then speaks to what other revenue streams we can build and create as well. And then where do we innovate from there? And then and
off you go, rolling. What gets you to here? Let's go as far back as we can. Childhood, life, pre-Dubai, then getting to Dubai. Take me through the life of Brendan.
Yeah. I think it is a sheer determination to prove a lot of people wrong constantly, which myself first and foremost is probably the main bit. But I think it's just I think for anybody that's sitting there thinking that, well, I have a vision of how things should be, but why is everybody else not doing it that way? That's not the response you should give yourself. You should back yourself and say, actually, I think I might be right here, because that's what got me here in the first place, was not just taking, well, nobody else does it, so it mustn't work. Not just taking that as the right answer. Look into it, find out, is that really the right response? And I guess challenging the day-to-day norm is what that does. That's first and foremost. But then secondly, again, and I keep talking about it, but passion really is the key here. If you are doing something on a day-to-day basis that you hate doing, you're not passionate about it, that if you didn't get paid for this, I wouldn't be here type thing, you're in the wrong line of work. And the reason that people don't change that is the paycheck. I need to pay my rent, my mortgage. I need to put food on the table, all that sort of stuff. I can't, lose that for the next, however many months it might be. But, and that is, just kind of a self-fulfilling prophecy for a lot of people. That's where the line is drawn. That's what gives people like me, like you, the ability to dream a little bit and take your balls in your hand and say, let's just do this. Let's go and get it done. And so I think, really it's a passion and a desire to challenge. Yeah,
makes sense. Now, where are you from in Australia?
Sydney.
So what's it like in Sydney? Tell me about when you were growing up in Sydney.
I grew up in a more regional area of New South Wales, fairly humble, not by any stretch, a poor family or anything like that, just humble and, 4 kids, mum and dad, big family outside of that. We spent a lot of time, on a farm growing up. We would in school holidays. We'd have breakfast, my brother and I, and we'd disappear for the day, just come back for lunch and dinner.
Yeah.
But I mean, Sydney is a fantastic place. It's very, very similar to Dubai in terms of in terms of climate, really in terms of culture. It is very free. There's not a lot of crime or anything in Sydney. It really is a beautiful space. You can go and have a surf at the beach in the morning, and then at night time you're up in the mountains in front of a fire, having a nice dinner. So it's a nice, diverse area. The people are amazing. The difference between, I guess, Sydney and why am I here in Dubai is Dubai just takes I guess if you are an entrepreneur, it takes this to a new level. Yeah. You just have access to so much more innovation and I guess conceptualizing with people. Yeah. I moved out here 10 years ago, and that's when I started my building relationships with different people. And back then, both me and these people that we have investment partnerships with now, we were all juniors in companies. And over those 10 years, we've learned, from mentors and seniors and things like that, what are different ways of doing things? How can we build our own investment structures, our own investment strategies? And so then when I returned 2 years ago, I'm meeting with these guys. Oh, what are you doing now? Oh, we run this fund and they do this and they do that. And that's something nobody else is doing. Those guys have created those things because they've been in this environment in Dubai. Now, we know working in finance, because we have clients here. We are going to be DIFC licensed in the coming weeks. But we know that the money is not here in Dubai. The money is still in Europe, in the UK, the US. It's outside of Dubai. The people that have money live here. Yeah. And I think there's no surprises that when we look at this mass migration of wealth, people are leaving, traditionally big Western countries like Australia and US and UK. They're leaving to go places that are sunny. I don't know whether it's just a climate thing, but those places that have a nice climate tend to also be tax-free environments. Yeah. So I think there's definitely something to that.
Might help.
But it's places like that where you're getting really broad, diverse ranges of skill, expertise, and things that people have built. And that's why I'm in Dubai.
So do you foresee cash coming here? The people with the cash have come here. Do you foresee people taking their wealth from Australia, from the UK, and bringing it into the UAE?
I don't know that they will. I mean, they're definitely investing in property. The ones investing in property definitely are.
Of course.
In the UAE, they're definitely more focused on investing in the development of the UAE, which fantastic, they should. Yeah. If you were to speak to anybody investing in Dubai, they're investing in either property or the growth and expansion of Dubai, which they certainly should be. There is so much of that here. Our structures are not in Dubai though. Our structures are all in Australia and Switzerland, the US. So no, I don't think there's going to be a huge influx of all of that cash into Dubai. I think it's still going to stay external, but it's definitely getting there.
Yeah, makes sense. And you'll be meeting people that will invest then with you in Australia and in Switzerland and stuff like that.
Yeah, that's right. Yeah, definitely. It's a lot more difficult to invest outside of Australia for Australians. So if you're an Australian, they're very insular. If it's an Australian mining stock or a bank stock, that's what Australians invest in. We know that our clients, because they've dealt with us for such a long time, that the world's actually a pretty small place. It's and there's a lot out there that you're missing out on. But we've found, as an Australian private wealth company, setting up structures outside of Australia, that's easy. Getting the money out of Australia into those structures, very, very difficult. I'm not 100% sure why. I mean, there's anti-money laundering laws and all those sorts of things, but it's not about that, because our AML compliance is always very strong. But I think Australia just wants to keep Australian dollars in Australia. I think really that's the only reason.
Interesting. The UK are very good at actually scaring the money out of the country. It's like, oh, you've got money, fuck off. Go somewhere else. We don't want it. We don't want you to keep your money here. In fact, we don't even want you here. Every fucking episode I always moan about the UK. I need to stop this. But they push it out. When you've got money, they say go away. Anyone that I know that's successful is either moving here or considering moving here. Ones that I would have never even expected from home. What are you most proud of everything you've done?
It's not the business. Definitely.
You can do two answers if you want. You can do a life one and a work one if you want.
Look, for me, it's been a pretty pivotal time over the last 6 months for family, because over the last 5 years there's not been a lot of time for it, and in the last 6 months there's been a lot of time for family. And so and also my kids are in a great age right now. I've got a little boy, he's 2 years old, and he's at that age where he just wants dad. He just wants to wrestle, and he that's all he wants to do. I've got a little girl who just loves to be loved, and loves ballet, and she does gymnastics now, and she rides horses and things like that. And I'm probably now the most proud of, and I guess if I sort of bring it back to a bit of life story, my wife and I, we took the kids out for a walk with the dogs, living near a golf course. We're walking around, on the fringe of this golf course. We go to a cafe, get a coffee, and beautiful environment. The kids are there, and they're having a baby chino and a cookie and whatever it might be, and just such a fantastic lifestyle to have my family in. And again, you can't really. You could do that in Sydney, but you're always, there's always the rat race. There's not as much of that here in Dubai. And I think just proudest of having a family that loves family time. Proud of every single one of them. My wife, she's a hard worker. She has her own career. She works really hard, that she has been working in for many, many years, very well known in her field as well. So definitely most proud of family. But ultimately, the reason why I can have that lifestyle is I'm also proud of the business and the company that we've built. The people that are around us, the people that are knocking on our door saying, can you help us with this? And very reputable people asking us for help as well. So, look, definitely very proud of a lot of that, of a lot of what my family's done for themselves, and proud of the business and the company as well.
Good, well done. Talk to me about some of the challenges along the way. So what challenges have you faced from when you started until now?
I think that when I started the company, one thing was definitely customer service for clients, financial concierge. It's huge for us. Another piece of that definitely was I never wanted to be dependent on anyone ever again.
I'm like that.
It is an absolute ball ache when you are, say it's a provider that you're looking for, an investment platform to put clients, holdings on or something like that, and you're waiting for weeks and weeks and weeks for them to set it up. I just do not want to be dependent on that. And we have had a lot of time where, because as I said before, we've spent a lot of time building through acquisition. Now, finding the acquisition target's very difficult. You've got to find a private wealth business that's similar enough to ours, that has been around for long enough, with typically advisors that are looking to retire, same type of clients, and they manage them in a similar way, but are wanting to sell that business. So that's hard enough as it is. Especially
when you're so innovative, finding a company that's ran by somebody that's wanted to retire, that seems like it's not going to join up very often.
Yeah, that's right. But and thankfully we've found a lot of clients that absolutely love it. The technology and the innovation, they embrace it. We've just acquired more than 6 months back in January, beginning of the year, a company where there are 75-year-old clients on, property in far north Queensland, far north Australia, that, and we're talking about property sizes that aren't acres. We're talking about square kilometres.
Yeah.
Big cattle farms, where these guys probably only use their phone as a phone still, and we're talking to them about, well, okay, we've got an authenticator for you to add an extra layer of security over your banking.
What's that?
Trying to get them to understand you need to download the app, but they embrace that. Surprisingly, they really do embrace it, and that's fantastic. But once we find those acquisition targets, then we fund everything. Okay, so we know that we have, based on the vertical integration of the company and all the different verticals that we do have, our multiples are very high, now. And so borrowing money to grow is a fantastic idea for us. If we're buying something at 2-time valuation, and by the time it comes into our business, it's anywhere from 8 to 15-time valuation, it makes sense to borrow the money to do that.
Yeah.
We've found a lot that funders are the slowest people in the world to work with, and they only operate at their own pace. And when you find an acquisition target, you do your due diligence on the business, you're looking at their financials, you're looking at the clients, you're looking at what it is that you're actually buying. That's already a 6-month process.
Yeah.
To then say, oh yeah, okay, we love it. Let's move forward from here, and then we go to the funder, and then you've got another 3-month process or a 4-month process. Which, and especially we've always dealt with a particular funder, and we're starting to move away from that, because being dependent on somebody else for us to grow our business is just not it at all.
I've got a friend that does property in the UK, and he's got £40 million out with one lender. And he just said, like, I'm sick of it. Like, I've got one singular point of failure. He started going private, just raising money from, people people not in the street, but you know what I mean? He comes here a lot, actually, to meet people. Oh, you've got £500,000 kicking about. I'll put that into this. I'll put that into that. Yeah. He's one of the I think he maybe is the biggest private person for that particular lender on the mortgages. He says it just doesn't make sense for him anymore. They're so slow and they're so backwards, and like, I'm going into meetings with their directors convincing them of something, and I think, like, what's the fucking point of this? Like, I'll just go and get money from somewhere else. So I understand the pace and the frustrations you can have with them. Yeah,
it's as I said, we've moved away. We're starting to move away from that now, and we took a pretty active decision because since day one, not only have the clients that I've had been really, loyal clients, and they're all still there, every single one of them. They've always said, "Oh, well, how can we invest in Capital House?" And it's always sort of been privately owned, even when it was little and as it was growing. How can we invest in it? And it's like, well, I never really wanted to give any of it up, to, maybe quite selfishly, but we sort of came to a conclusion, and this is, now 6 years down the track, where in a most recent acquisition we've done, we said, well, why deal with a funder? They're taking too long, they're so slow, they charge us fees, they do this. Clients want to invest in our business. Let's go out to our wholesale clients, let's build a bond structure where they can invest in the company. If we are paying interest on a loan to a funder, why are we paying it to someone else when our clients are sitting here asking us for alternative investments that pay them income? So we went out to clients and said, look, complete upfront disclosure, we're growing the business. We go to a funder, I'd rather pay you, if I'm being honest. And
clever.
People didn't even take us a week to fill the funding for our most recent acquisition. And it's one of those moments where you just think, why did we not do this sooner?
I knew that's what you were going to say then.
It was incredible. And so, really, being dependent on others is a no for me. We're not doing that anymore.
Is it scary managing people's money? Like, I guess you've been around long enough, but you must have had some chaos along the way where things have gone wrong. You've lost money on this has gone wrong there. Like, what's that like?
Look, there's always stop losses. There's always protection. There's also there's always downside preservation, protection, all those kinds of things. But there are also always negative times in markets. There are always investments that go bad, don't quite work out as well as you'd expected. And so, this again probably more so speaks to, that that customer service side of things, but I've had some amazing times with clients. You know, as I said, that end of that Trump era of his first term, clients, I could have written a book, and the book was titled "All of My Clients Have Tax Problems," because they all made so much money. I've had times where we've been down really bad, and that is not a fun time for us. It's not a fun time for the clients. And what I say to my younger associates, the ones that are client facing, is that is the time you're on the phone with your clients. You know, you don't call clients to tell them about the wins that you've had. You call them to keep them or to give them comfort in tough times. And again, as I said before, I've got some clients that I've had since 2000, and when I first started, and I was a junior, since 2005. You don't go through the good times and the bad times and still have them 20 years later, unless you have a really good relationship. Yeah. And it's all about relationship. And being a client of Capital House is not just about growing your money. It's about the personal relationship that we've built with every single client. Yeah. And that's key to us. When I talk about customer service, I talk about, for us to move forward and understand what customer service is, I think we have to go backwards and look at what customer service used to be. You know, if we go back to that traditional Swiss private bank type, aura of, you literally there, just you live your life for the client. You know, at the drop of a hat, you're there for them to do anything, and that is what customer service is for us. And that's what I mentioned before. If it's a client's kid's birthday, or a client's kid's just graduated from high school or university, get on the phone and congratulate them for that, or say happy birthday. Not only is it just a really nice thing to do, and it's great for building relationships with clients, and the fact that that that's happening, you're taking an active step in understanding what's happening in that client's life. But let's be honest, that client has just spent the last 6 years paying $100,000 a year for that child to go to school. They're not paying that anymore. They've got more money. It needs to be invested. So there's so many layers to really good customer service that is not just about maintaining a good relationship. It's about maintaining comfort for the client in the tough times, but it's also just about running a good business, understanding where everything's at. And we joke, we've got a client that every time we meet him, he's got another $1 million that he just found, which is, funnily enough, is actually by definition what's happened. But the reason that happens is because that client's been around for years. He has trust. Yeah. Every time money pops up, he's like, that's what I want to put it. I don't know what to do with this. You guys just take it and run with it. And we've built up such a good customer service for people where the accountant historically has been the most trusted professional in anybody's life. We have our clients coming to us checking their accountant's work. So much so now that we bought an accounting business, and now we. Of course you did. So it goes back to everything you've said before. Right. Yep. 100%. And I know I'm conscious now that everything I talk about, every time you ask a question, I'm coming back to Capital House and the business, not just myself. But it is a big part of my life, definitely. Yeah.
Well, let's go for the more yourself thing here. So you've spoke about family. It sounds like you've got a lot more involved in the family life over the last little while. Did you feel there was a struggle between family and business before that?
Always.
Yeah.
Always. And, I've said before, there's no way that you can have balance, complete, utter balance, if you are really sort of locking yourself into growing something, from a business perspective. You cannot give 100% to that and 100% to your family. So they definitely suffer and struggle. The key piece to that is, I guess, having a family that understands what you're doing. Yeah. And, Dad has to sort of focus on this for a little while, but if he does that, then we get this at the end. Yeah. And, one thing I said to my wife a little while ago is that what I want you and the kids to have is I want you to have all of the reward but none of the risk. But the thing that they sacrificed for that was me for 5 years, which is significant. And I know now, and that's why the last few months for me with my family has been so pivotal, because I've really reconnected with my kids and my wife a lot more in the last few months. So, I know I keep sort of coming back to that, but it has been very important. And now I'm kind of at a phase where I can do that.
Yeah. And so that's what I was going to say was, you have worked to get that luxury.
Yeah.
A lot of people wouldn't have that. On the flip side, a lot of people would work so hard to get to the point that they can get that, but then not know when to turn around and go, right, it's actually time to go and do that now. I think that you've done very well, and you're very fortunate to be in that position where you've done the work and now you've gone, right, now I can pivot. Because I think a lot of people will get that wrong somewhere along the way.
Yeah, absolutely they can. And I had to be told when it was time. I didn't realise. I definitely had to be told when it was time. But, for 6 years, I don't even know how long it is, almost 7 years it must be maybe. It's been 3 a.m. till 9 p.m. Literally every day, every weekend. And this is the first year since the beginning of the company, even actually the first year since the last 2 years in the corporate company I was in, I've worked Christmas every year.
Wow.
This is the first year where I don't have to do that. I can go for.
You probably didn't have to do it some of the other times.
Well, that's right. But I mean, ultimately, for me, what it's been is if I'm not working, I'm not speaking to clients, we're not making money, which means you can't put food on the table.
Yeah.
Because a lot of our business is transactional as well as it is an annuity, and I know that we have transitioned a lot of that now so that it is less transactional. We have less dependence on transactional revenue, and that is exactly why now for this Christmas holiday is all about Christmas holiday.
Good.
So, yeah.
Well done. Any more challenges? Anything else? Have we missed anything?
No, I think we've covered all that really, really well. I think that the challenges side of things is look, it's tough. It's tough starting a business.
Yeah. It's
tough running a business. I was speaking to somebody the other day who I've invested in their business, and he said today's a hard day, and I think he realizes that he knows already. He doesn't need me to tell him. You're going to have good days and you're going to have bad days. You have the bad days to help you understand how good the good days are.
Yeah.
And make you fortunate for those times. And I mean, ultimately, the thing that he was complaining about was that he has too many orders to fulfill. He can't
when
get
that
them
happens.
out quick enough. and sometimes we need a little bit of clarity, but that is a real problem for him. That's from his perspective, it was a really hard day. And what it's doing, though, it's really good that he can capture that concept as like, this is starting to become a problem. How do we fix it?
Yeah.
And that comes back to that innovation and expanding. If you can't figure out how to get production quicker, you're always going to have that problem. So now the problem is facing you, because if you face this problem 6 months down the track and you've got 5 times the workload, you're in a lot of trouble.
Yeah. It'll bounce backwards and forwards as well, right? It'll go, okay, we've got too much work to fulfill. Then it'll bounce back to, oh my God, we've doubled the capacity. We need to sell more stuff, and it's like it'll just keep going backwards and forwards.
Yeah, exactly. I was talking to somebody else, another business I'd invested in, and I was sort of saying, so I'd invested in this business, and he was saying, it's really busy, and I'm just trying to get the time to do this and that, and whatever else. And really, he was finding it tough to get the time to do his core business, which is creative. And I said, well, you just kind of keep plugging along, and when you're too busy to do anything, not only is it going to tell you that it's time to hire somebody, it's going to tell you who that somebody is.
Clever.
And so when it came time for me to hire my first person, I was able to see, okay, I can either give up speaking to clients and doing the research and analysis in the mornings and watching portfolios, or I can give up more of the compliance, dealing with product providers, doing this, doing that. I didn't want to give up the client side, so I hired somebody to do this.
Makes sense.
And so you do kind of, in business, have to push yourself to a point of, now it's a little bit too far. I probably should have hired somebody 3 months ago.
Yeah.
But that is going to, if you can forge ahead, it is going to tell you who you need, what you need, and how many of them you do need. So
makes a lot of sense. Brendan, where do people keep up to date with you? Where do we find you?
I think primarily on Instagram is the best place. Regularly updating people on how things are going. We've got Capital House Instagram as well, so that we've got the younger guys on there doing regular market updates, what's happening in global markets. As well, from an entrepreneurial perspective, there's of course my Instagram as well, which I'm sure we'll have the details for. But really social media.
Great. Thank you very much, Brendan. It's been fantastic.
No, beautiful. Thank you very much.
Cheers.